Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having a great day. Happy Monday to you, regardless of how terrible the market is here. It's pretty much par for the course, right? We have more terrible than good market days, and you just kind of got to get used to it. Unfortunately, it's just kind of the par for the course. I'll try to remain positive in this video here, but there's going to be some underlying sarcasm just based on how terrible trading conditions really are at this point. Good news is we still have a short position open from Bitcoin, so still in good shape. We haven't been taking any longs in the last 3 or 4 trading days to ensure that we stay on the sidelines, let things cool off before we consider a long, or at least let the bottom come in here, right? Is this the bottom? The question is yes and no, or the answer is yes and no. Let me explain more about that here in a minute. Before we do though, I want to kind of preface with this being a 2% red weekend. In other words, we're 7 for 7 weekends now, folks. Every single weekend this year has resulted in a sell-off. So please, 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 if you saw my video from Saturday, you're welcome, and thank you for the awesome feedback there. I like to kind of urge caution. I highlight this every time I talk about trading on the weekends. It's a bad idea. I've made the mistake of doing it already once this year, and it did not work out very well. Okay, my community can speak to that. So the general consensus is don't trade on weekends. Low volume is terrible, and they've just been selling off. So if you're going to do anything, consider shorting on the weekends. Had we reached just say 175 to 180 for Solana, would have shorted that. Bitcoin, I was hoping for 97 to 98,000. We just fell just shy of that. So a lot of little missed opportunities, but I'm okay with it because it's just terrible market. Okay, so let's look at what may or may not be terrible on the back end here at first, kind of go from there. And please hit the like button, folks, before we get started. Deeply appreciate that. And make sure you check us out over at Bitunix too as well. Awesome exchange link down below for these guys. So quickly to note here on the liquidation data. There is this heavy concentration liquidation that just got swept. And if you kind of zoom back out, the reason why it's there is because most people have stop losses and or liquidation events just below local lows. And previously it was 94,700. That level has since been swept. So we saw billions of dollars get liquidated there. That is maybe about a $5 to $10 billion swing. Okay. Now it continued lower, and a lot of other late longs continue to get destroyed. And we can see some other late longs here at 92 to 93,000. I'm not saying that being a late long is a problem. It's just the amount of leverage. If you're getting stopped out, then you obviously are over leveraging. Okay. So again, keep your leverage low. This is low to medium leverage here at 92 to 93,000. Those are fairly safe for the moment, but I still wouldn't recommend it just based on the way that things are kind of breaking down here, so to speak. I'll explain more about that in a minute. But again, my ultimate range is to try to take a long at 95,000 and to take a short at 98K, right? I've talked about that for the last 18, now I think 20 trading days. So we've been going in this range for a long time. Big picture though, we can see 92 to 93,000 just kind of reiterating itself or reaffirming how much support for one, but also for two, how much liquidation is there. So I would say that 92,000 seems like a much better long than 93,000, just based on the simple fact we got tons of liquidation there. We're getting close to that price action. I wouldn't be surprised if we see a very aggressive candlewick down. We can see liquidation delta is getting overextended though. Keep this in mind, we're at 15 billion in the red. So we have $15 billion more in liquidation for shorts than we do for longs. Okay. Now again, I know it seems kind of crazy because how could that be the case when we got just as many longs at 93,000? Truth is, there's a lot more liquidation that can occur to the downside, but that's more local. This is looking back 5 days. Or sorry, that's more macro. This is looking back 5 days, where that's actually looking back, for 30 days. So you got to keep in mind those are two different comparisons. So just be careful misunderstanding that. But when you have an overextension here, it does imply that a reversal could happen soon, based on the simple fact that shorts need to get squeezed out here, and that's how market makers work. They pump the price action up to destroy any late shorts. Because again, right now I feel like you're shorting the bottom if you're trying to short right now. We want to wait for a bearish backtest of this previous support turned resistance level first before you consider shorting. That's why you don't just jump into a breakout, right? That's kind of the same concept. Okay, what I'm getting at here with open interest, and just kind of reiterating this here, 98,000 key level resistance. 95,500, maybe the new resistance because it's that local low that is soon to be retested as a new high. Okay, so keep that in mind. That's kind of where we're at. We're going to take a look at the weekly before we get started, and just let's go ahead and make it a little easier here for us. Look at the other chart. This is, by the way, this is the Bitstamp chart. This chart is goes way back to like 2011, so it's kind of one of the best ones to use for moving averages. And yes, I use SMAs, not EMAs. I think SMAs are more effective on larger time frames. because it's a 1-to-1 ratio. It's not exponentially moving. There's no reason to have exponentials on macro timeframes. Again, just my personal opinion. When we take a look here, though, we can see 2 doji candles here. So we've had 2 weeks of indecision, and obviously we've seen that, right? The last 2 weeks worth of trading, or more so 20 days, almost 3 weeks worth of trading, we've been in a range between, candle wicks down to 93,000 and wicks up to 100,000, but it's mostly 95 to 98K. That's kind of reflected there. We're above all moving averages here, which is beneficial, right? I'm using bunny ears there because, again, it's truthfully not like, it's a consolation at this point. Mainly because RSI is continuing to lower. While it's above 50, that's still positive, but it does imply we could see further downside. We're also underneath this moving average here, which is generally unfavorable, because you can see awesome things happen when you're above and terrible things and or range-bound activity like we saw previously. Remember, we were stuck in the range of about 54,000 to 74,000. Well, it's feeling very reminiscent of that. I feel like we're going to have another descending, broadening wedge pattern and inevitably a breakout to the upside, but between now and then it's going to be nothing but pain and misery. Okay, so sorry to be so positive, right? So glum rather. But the truth is, we're diverging on the MACD here. Stochastic trying to bottom out. That doesn't mean much at all. Money flow index is tapering off below the RSI now, generally unfavorable. So you can chalk the weekly time frame up to not looking good whatsoever. Okay. While it's got, again, a consolation being above a SMA and we're over 50 in the RSI, that's great. But it still implies we've got a lot of potential downtrend to continue, or more continuation to the downside before it decides to recover. Okay, so that's kind of where we're at there. Let's quickly note here on the daily too as well where we're at. We are under 50 in the RSI here. We have been for a while. We know this, and I've talked about how bearish that is in a general sentiment. We can also reflect here that stochastic's pulling back. Money flow index is below the RSI. MACD is pretty much diverging, but also kind of plateauing. Again, it's hard to get any kind of breakout type of identifications when you have such stagnant price action. I mean, granted, it's not stagnant, it's extremely volatile, but it's compressing into a range, and range-bound activity is exactly that. You trade the range until it discontinues. So me personally, if we do close in the low 95K range today, I may consider a long position just based on the simple fact that we're stuck in this range, and until we break otherwise, it's going to continue, right? So again, a lot of these validation things that we see on the charts don't mean too much outside of supports and resistances, as well as this range-bound activity that has been ever consistent. All right, so again, that's kind of where we're at there. Let's take a quick look at the 4-hour time frame. We are under 50 and 20 on the RSI, generally unfavorable. You don't really want to take a long into that. That's the general idea. We can also recognize here the same scenario under 50 on the RSI. Money flow index is low. Granted, when MFI gets down closer to 20, we commonly see a bounce based on the simple fact that there's so much money flowing out. People don't know what else to do except to buy and put money in if they have it. Right? Well, billionaires have it. You and I, people like you and I, are probably running out of alternative funds to put back in the market. Just because, again, this whole rinse and repeat. They're making billions of dollars. Majority of other people are just getting their asses handed to them. That's the best way to describe it. We do have a fair value gap a little bit above the price action here. We can see this order block here, of course, over the weekend. That is quite substantial. Pretty much anytime you see a large order block, the price action is due to turn itself around. I'll give you some examples later, but that's generally unfavorable. Right there at about 96,000, we have a lot of resistance. So again, taking a long into that may not be the best call. Now, once more, we've had a lot of success taking longs. Like we've been taking longs and shorts in this range. We shorted here, we longed here, we shorted here. We're in pretty good shape, all things considered. So the question is, do we take a long here? That's the question. Well, I want to wait a little bit longer before I consider taking a long here. And just because, the main reason why is just because this is this heavy amount of selling pressure on a Monday. I don't really like the progression into this trading situation here. While this is likely an overextension trying to trap late shorts, and we have a significant imbalance of shorts versus longs, there's still a ton of liquidation just below the price action. So I wouldn't be surprised if we see one more wick down. So I would much rather wait for $92,000 to $93,000 range that may or may never happen and get a good fill than taking a long right now and the price continues lower. So it's for the most part, everything's telling us it's going to continue lower, right? But once more, the ranges have proven to be quite successful in the recent past, so there's that as well. It depends on what kind of trader you want to be at this point. No matter how you look at it, any kind of trade is a high-risk trade. this is pretty much explaining that there's not a single reason to consider a long position here. Okay, so again, it's not fantastic. There's no other way around it. But the best trade in this scenario is no trade at all. Okay, so I would highly recommend just hitting the brakes, pumping the brakes, taking it easy for a day, and maybe wait to see how this price action recovers first. For the love of all that is awesome, do not take any longs with altcoins right now. It's a bad idea. Everything is bleeding out. You might get lucky, sure, but there's no bottom in sight for the moment. Okay, and it's just not a good market to take longs in. So if you're going to do anything, I would say consider some shorts, but I even still feel like that's a bad idea right now, just being really close to the potential bottom. Cool. All right, folks. Sorry, it wasn't what you're looking for and hoping for, but the truth is, it is what it is. I'm always going to shoot you straight, and I'm not going to sugarcoat anything here. There's no hidden bullish divergence. There's nothing here to really see that's worthwhile. Okay, minus the range bound activity, and then we want to see if that range continues to hold. So we'll see here soon if that is the case. I hope you have a good rest of your day. We'll post a playout chart on our Twitter, Telegram, and Discord. Links down below for that. If you do want to become a better trader, quick heads up, make sure that you are paying attention to my trade alerts. I explain everything as to why I'm taking the trades I'm taking. And I mentioned this weekend too, folks, CME gap, that was going to get filled, and it did. And of course, the price action pulled back. So congrats to those who listen and learn from that. So just know there's trade alerts there as well. And then obviously make sure you read through my signals guide. I've got like kind of a newer automated trading strategy. Make sure you stay abreast with that and keep reading. Cool. All right, folks, have a good rest of your day. Thanks again for your time. See you soon. Bye-bye.